5 of the fastest ways you can double your money without unnecessary risks. Almost everybody wants to double their money fast. People always try to identify which investment can double their money as early as possible. There are several schemes where your money can be doubled in a particular period. However, it's important to note that you shouldn't expect magic here in terms of duration. Thumb Rule 72 gives you information about the time required to double your money. The rule says that dividing 72 by expected annual return will give you a time when your money will double. Imagine, if you invest $1,000 and the expected annual return is 10%, then the money will double in 72 divided by 10, which equals 7.2 years. This episode will cover the 5 fastest ways you can double your money without unnecessary risks. We'll also take a look at how each strategy works. But before we go too far, don't forget to hit the subscribe button so you don't miss the future episodes about financial security. 1. Invest in blue chip stocks. Blue chip stocks are shares of large, established and financially stable companies that have been around for a long time. The term blue chip comes from the game of poker, where a blue chip holds the highest value. On Wall Street, a blue chip stock is usually a highly valued and well-known company with characteristics that benefit investors over the long run, such as stable cash flows and consistent dividends. Examples of blue chip stocks are Amazon, AMZN, 3M, MMM, Alphabet, GOOGL, and American Express, AXP. Others are Apple, AAPL, Bank of America, BAC, Coca-Cola, KO, and Costco, COST. Most investors understand that blue chip stocks have stable earnings and can double their money. During an economic downturn, investors may turn to these perceived safe havens because of their steady nature. Some people believe that blue chip companies can offer security during periods of slower growth due to their experienced executive teams combined with their ability to generate stable profits. So while blue chips are not immune from losses if the broader stock market enters a bearish phase, the idea is that these names will be less volatile than smaller growth companies and will also be the first to rebound when the market eventually recovers. 2. Invest in income stocks and bonds. Your mix of stocks and bonds should reflect your age, goals, and risk tolerance. Examples of income stocks include retail behemoth Walmart Inc., Safety Insurance Group Inc., Edison International, LyondellBasell Industries NV, and Gilead Sciences Inc. If you don't fit the profile of somebody who should be heavily invested in equities, such as S&P 500 index funds, you can look to bonds to double your money. If your bonds return 5% on average every year, according to the rule of 72, you can double your money every 14.4 years. That might sound disheartening compared with doubling your money in 7 years, but remember that investing is a bit like driving on a highway. Both fast drivers and slow drivers will ultimately reach their destination. The difference is the amount of risk they assume to do so. By obeying the speed limit, you put yourself in a position in which you're likely to arrive at your destination in one piece. By stomping on the accelerator, investors can either reach their final destinations faster or crash and burn. Driving is always risky, just as investing is always risky, but certain investments expose you to higher levels of risk than others, just as disobeying the speed limit exposes you to greater risk than obeying the speed limit. 3. Invest in stock options. Stock options are the fastest way to generate very high returns, but it's also the riskiest method because it requires substantial speculation. Unfamiliar with options? An option is a contract that gives you the right to buy or sell a certain amount of shares in a company, usually 100, at a predetermined price and at a specified point in the future. You pay a premium price for the options. Before the contract expires, you can buy or sell at a strike price, which could be lower or higher than the share's value. There are puts and calls. Put option allows you to sell stocks at a specific price before the expiration of the contract. Call option allows you to buy stocks at a specific price before the expiration of the contract. There are several different ways you can leverage options in your investment strategy. Still, if you're trying to double your money, then you'll want to speculate whether a company's stocks will rise or fall and then purchase options accordingly. You should avoid stock options unless you're a seasoned investor. They're difficult to invest in because not only do the stocks need to rise and fall as you predict, they also need to rise and fall within the time frame that's designated by the option. A successful option move could generate returns that are 10% or much higher, but there's a whole lot of speculation involved and it's very risky. 4. Invest in real estate. One of the best ways to double your money is by investing in real estate. Nearly all real estate investments double in time because properties naturally appreciate in value. There are 4 ways to double your money with real estate: rent by room, fix and flip, short-term rentals, buy and hold. Let's review each of these strategies. 1. Rent by room. If you're renting out a residential property to tenant, you might consider renting out the property by the room, rather than renting the entire house to a single tenant. This is an excellent way to increase your cash flow and maximize your property's return. 2. Fix and flip. A fix and flip is one of the best ways to generate high returns in real estate. It also enables you to generate a high return in a very short amount of time. The hardest part about executing a fix and flip is finding ways to keep the renovation costs down. It's best if you can learn how to do basic renovation work yourself, like flooring, painting, or landscaping. You should only hire contractors to do highly specialized work like roofing or plumbing. 3. Short-term rentals. Short-term rentals are often more lucrative than long-term rentals. Short-term rentals enable you to charge higher prices more frequently. This is especially true of vacation rentals. It's possible that a vacation rental can generate as much money in 1 week as a leased property can generate in 1 month. If you own a property in an ideal location, you can make a ton of money by renting it out to travelers. 4. Buy and hold. Buy and hold is the most traditional real estate investing strategy. You'll buy a property and hold it for a long period of time until it appreciates. Your profit will depend on how much your property appreciates. The key to buy and hold is to find a property in an up-and-coming neighborhood, especially those undergoing redevelopment. Buy and hold is a long-term investment strategy. You should prioritize this strategy if you're trying to save for retirement and looking for steady and reliable returns. But it's also a good diversification option for short-term investors. 5. Invest in startup businesses. Investing in startup companies is a very risky business, but it can be very rewarding if and when the investments do pay off. The majority of new companies or products simply do not make it, so the risk of losing one's entire investment is a real possibility. The ones that do make it, however, can produce very high returns on investment. Investing in startups is not for the faint of heart. Founders, friends, and family, FF&F, money can easily be lost with little to show for it. Investing in venture capital funds diversifies some of the risk, but also forces investors to face the harsh reality that 90% of companies funded will not make it to the initial public offering, IPO. For those that do go public, the returns can be in the thousands of percent, making early investors very wealthy indeed. A startup goes through a number of stages, and each one of them offers distinct opportunities and risks for investors. That's it for this episode. Please give us your feedback in the comments section below. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck, and see you in the next episode.